Hi there, you're watching Market Cafe on ET Now with me Shreyansi Singh, and with me as always is Snehisha, and over the next 1 hour we take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, Sneh, let's take a look at the international handover, and it does look like the S&P 500 has had quite a good week yet again.
Absolutely, and there is no stopping for that index either. Good morning. Let's take a look at what the global handover is looking like this morning. And stock futures are looking rather flat in overnight trading last night as the market is set to enter the last week of June and 2024's first half-year record, near record highs. The S&P 500 scored an intraday record of 5,505.5 on Thursday and posted yet another winning week. The equity benchmark gained 0.6% last week, notching its 8th positive week in 9 weeks. However, signs of exhaustion have started to emerge recently, particularly with market heavyweight Nvidia's back-to-back sell-off. The red-hot chipmaker fell 4% last week after 2 consecutive declines of more than 3%. The pullback occurred after Nvidia briefly dethroned Microsoft as the most valuable company in the US chart analysts, so that happened last week. Last week was entirely about the red-hot rally that S&P 500 had seen, and also the slight bearishness that we were seeing coming across Nvidia. Analysts have also pointed to bearish patterns in Nvidia's recent trading, like I mentioned. Now, still the enthusiasm surrounding artificial intelligence has lifted the market significantly this year, even as investors have grappled with shifting expectations for rate cuts and a slowing economy. Now, the S&P 500 has advanced almost 15% this year after notching 31 record closes, and investors will closely monitor May's personal consumption expenditure data, the Fed Reserve's previous inflation gauge, which is all set to be released Friday morning. So all eyes are going to be, and the build up throughout the week is going to all lead to this data coming on Friday from the US. There are also a number of key company earnings this week, including FedEx, Micron, Walgreens, Boots Alliance, as well as Nike. But well, a very interesting fact here for you this morning. This is the longest stretch without a 2% sell-off since the financial crisis for the S&P 500. The S&P 500 has gone 377 days without a 2% or more than 2% sell-off. That's the longest stretch for the benchmark since the financial crisis back in 2008-2009. So the moves coming in for the S&P 500, that index continues to rally. But while that was on the US front, let's also shift focus and see what's been happening when it comes to the European markets, and seeming to be slightly under pressure on Friday. That's where the European markets have ended. DAX is lower by 0.5%, FTSE lower by 0.5%, and the Pan-European Stock 600 highly under pressure, 0.8% lower is where that index is closed. So well, this is what the global handover is looking like. Rather mixed, slightly under pressure coming from Europe. But while this was on the equity front, Shreyansi, also take us through what's been happening in the world of oil.
Well, absolutely. So it's very interesting what we're seeing play out in the world of oil as well as gold. So first, let's take a look at oil. Then in US, crude oil on Friday posted a second weekly gain in a row as gasoline demand has surged to post-pandemic highs. When you look at oil prices, fell on Friday but were ahead nearly 2.9% for the week. The oil rally has lifted the energy stocks, with the sector up 2.4% to lead the S&P 500 this week. And when you look at gasoline consumption as well in the US, you're looking at a surge of 9.4 million barrels per day, or that is the kind of move that we saw last week, and that's the highest level for that time of the year since the COVID-19 pandemic ended, according to JP Morgan. Let's also take a look at prices then, and when you take a look at WTI, you're looking at a downtick of about 56 cents or 0.7% thereabout to around $80 per barrel, and that contract has also gained 12.6% on the flip side this year. When you take a look at Brent, then you're looking at a downtick there as well of about 47 cents or about 0.6% to those $85 per barrel levels. And year to date, the global benchmark is also ahead by 10.6% thereabout. Let's also take a look at the demand picture, because the global oil demand has risen by 1.4 million barrels per day so far this month. US gas consumption, as well as robust summer travel in Europe as well as Asia. And those are the kind of triggers that we've seen. When you take a look at oil inventories, then they rose by 15 million barrels in the second week of June as China restocked, though the investment bank, that is JP Morgan, is forecasting drawdowns later this summer. In fact, they're forecasting a Brent price of $90 per barrel by September as the market tightens on falling stockpiles. due to summer fuel demand. So that is the kind of expectation that is being penciled in when it comes to oil prices as well as the movement. Let's also take a look at gold then, and gold prices dropped more than 1% on Friday, weighed down by a stronger dollar and higher bond yields after data showed that strong US business activity was registered, as well as auto catalyst metal palladium also jumped to a 1-month high. So we're seeing some strength for palladium, but can't say the same about gold because there was a downtick of about 1.7%, and gold was around those 2,300 per ounce levels.
Absolutely, lots happening when it comes to equities as well as oil and gold. But let's take a look at the action-packed week that we have ahead. And first up, let's take a look at all the important events that you need to be watching out for in today's trading session. Now, when it comes to markets back home, the BSE Sensex region is going to become effective today, and Adani Ports will be replacing Wipro in that index. So watch out for both of these counters as well. In terms of corporate action, then today is the last day to buy the shares of Oberoi Realty to be eligible for dividend. And Chemplast Sanmar, that stock is going to be in focus because the board of that company is going to be meeting today to mull fundraising. So watch out for that counter as well. Lock-in period also ending for two companies today. Landmark Cars, 21% equity in fact coming out of lock-in today. You also have Muthoot Microfinance with 58% equity coming out of lock-in. The 18th Lok Sabha session also begins today, and Karnataka High Court is going to hear the Think and Learn, which is Baiju's petition challenging the validity of investors convened in its AGM. So lots happening today, and inside the markets and outside of the markets as well. Lots to watch out for, so keep a close eye on all of these cues for today's trading session.
Well, absolutely, lots of cues to keep an eye on, and meanwhile, brokerages also across the board have raised their year-end targets for the S&P 500, largely led by expectations of a soft landing and growing chances of the Federal Reserve cutting rates this year itself. Remember, US consumer prices were unexpectedly unchanged in May amid cheaper gasoline, but inflation likely remains too high for the Federal Reserve to start cutting interest rates before September against the backdrop of a persistently strong labor market. Let's also take a look at the economic growth, inflation and asset class forecasts. And on your screens, you do have the kind of expectations that are being penciled in by Wells Fargo, JP Morgan as well as BofA.
Alright, important numbers to watch out for. Let's shift focus then. And Facebook parent Meta Platforms has been reportedly in talks to integrate its generative AI model into Apple's recently announced system for iPhones. The move comes as Apple plans to add technology from other AI companies on its devices amid reports that it was discussing a potential tie-up with longtime search partner Alphabet's Google. The iPhone maker is also expected to discuss partnerships with other AI companies in different regions like China.
Well, spreads between US investment-grade bond yields and treasury yields have surged to their highest in over 3 months, largely fueled by political uncertainty in France. The moves follow turmoil in French financial markets, where ahead of France's surprise parliamentary elections, investors sold government bonds because of concerns over a budget crisis in the Eurozone's second biggest economy. Treasury yields have declined this month, with benchmark 10-year yield down to 4.269% on Friday from 4.55% at the end of May.
And among other important news this morning, China and the European Union have agreed to discuss the planned imposition of tariffs on Chinese EVs imported into the European market. Street is now pricing in the possibility of easing EV prices as both sides have agreed to negotiate a planned series of import taxes. The call marks the first time the two sides have agreed to negotiate since the European Union threatened China with electric vehicle tariffs of up to 38%. Officials from both ends suggest that the two sides would continue to engage at all levels in the coming weeks.
Alright, then that was your daily dose of global news and updates to go with your morning cup of coffee. But let's take a quick break right here. When we come back, we'll take a look at how the Asian markets are faring.
Hi there, welcome back. You're still watching Market Cafe on ET now. Let's take a look at what the Asian markets are up to this morning, and looking largely under pressure. That's where Asian markets are looking like as of now. And let's start by looking at what ASX 200 is doing, and special attention will be paid to Australia's May consumer price index figures that are due on Wednesday after Reserve Bank of Australia Governor Michelle Bullock has revealed that the central bank has discussed hiking rates in its last meeting. Now remember, should inflation come in higher than what is expected and spur the RBA to raise rates, it would be the first major bank in Asia Pacific to do so as environment where investors are waiting for rate cuts barring Japan. So lots of eyes are going to be on ASX, especially on Wednesday, and what Australian markets do on Wednesday after those inflation numbers are out. But as of now, ASX trading lower by more than 0.5%, 0.6% lower is where ASX is. Open 0.2% lower and continues to build on those losses. So that's Australia's ASX 200 for you. Shifting focus, let's also talk about Japan, because inflation figures from Japan are also due later in this week. And Japan was lower by 0.2%, but has flipped that and is marginally into the green as of now. Just a 30-point uptick coming in for Nikkei as of now. Shifting focus, let's also talk about South Korea's KOSPI that dipped 0.4% on open. Let's see what it's doing right now and builds on those losses and how, because it's lower by almost 0.7%, a 20-point cut coming in on South Korea's index. Also taking a look at what Hang Seng and Shanghai are up to, both of those indices were in the red last time I checked. Hang Seng 125 points lower, 0.7% cut coming in for Hang Seng. So under pressure is where Hang Seng is as of now, and Shanghai also 0.5% lower, a 13-point cut coming in. So barring Japan, which is also very marginally in the green, all of these major Asian Pacific indices are in the red as of now. And let's talk about where we shut shop on Monday, on Friday, slightly above that 23,500 level at 23,501 to be precise on the spot basis. Implied open at 23,385, indicating a cut of more than 100 points both on the futures and the spot basis. Remember, global cues have also not been very strong. Global handover looking rather weak. Europe under pressure, US rather mixed, and Asia as of now very highly under pressure. So not looking very well for our markets, especially when the implied open is penciling a more than 100-point cut. So we'll just have to sit tight and see what today's trading session has in store for us, Shansi.
Well, absolutely, and we'll do just that. We'll sit tight and see how that pans out for us. But for now, welcome back. Thank you so much for staying tuned in. Well, time now for the most important cue this morning. Takeaways from the all-important 53rd GST Council meeting. Several recommendations were made at the meet to refine tax rates and service exemptions under the regime. Let's take you through the key highlights then. And aircraft parts and tool imports will now be taxed at 5%. These include testing equipment, tools and toolkits of aircrafts. Meanwhile, a 12% GST will be levied on all steel, iron and aluminium milk cans. Levy on carton boxes has also been slashed to 12% from an earlier 18%. Additionally, solar cookers, poultry machinery and sprinklers will also be taxed at 12%. Among the key exemptions, you do have select defense imports that have been exempt from under the ICST regime. Certain railway services and supplies have also been placed under exemptions. Shifting focus then to recommendations, and interest and penalties for Section 173 demand notices have been waived off financial year 2017 to 18, 18 to 19 and 2019 to 20 as well, given taxes are cleared by 31st March 2025. Additionally, the Council has also recommended a nationwide implementation of biometric-based Aadhaar authentication for GST registration applicant in a phased manner. The move largely aimed at enhancing registration integrity, curb frauds via fake invoices as well. So those largely are the highlights, but let's also listen in to the word coming in from the Finance Minister about this then.
The 53rd GST Council meeting has actually taken a lot of decisions on trade facilitation, easing compliance burden, and giving relief to taxpayers in terms of compliance easing out. So this will benefit the traders, MSMEs, and taxpayers, is my strong view. There was a decision taken today, and the GST Council recommended waiving interest and penalties for demand notices that have been issued under Section 73 of the GST Act. So, for all those notices which were issued under Section 73, for the fiscal years 2017-18, 18-19, and 19-20, The Council has recommended waiving interest and penalties on the demand notices which have been served. And this will be applicable in cases where the taxpayer pays the full amount of tax demanded in the notice by 31/3/2025. Council has recommended that the time limit to avail input tax credit in respect of any invoice or debit note under Section 16(4) of the CGST Act through any GSTR 3B return filed up to 30/11/2021. So, for the same requisite amendment, retrospectively with effect from 1st July 2017, the Council has made a recommendation. Council has also recommended that the maximum amount for pre-deposit for filing appeal before the appellate authority shall be reduced from 25 crores CGST and 25 crores SGST to 20 crores CGST. CGST is 25 crore, comes to 20. SGST is 25 crore, comes to 20 crore. And that is the maximum amount of pre-deposit for filing appeals before the appellate authority. Council recommended to prescribe a uniform rate of 12% on all milk cans, meaning steel, iron, aluminium, which are irrespective of the use. They are called milk cans, but wherever they are used, that will be the rate applicable, so that no disputes arise out of it. Council also recommended to prescribe a uniform GST rate of 12% on all carton boxes and cases of both corrugated and non-corrugated paper or paper board. This will in particular help the apple growers of Himachal Pradesh, the apple growers of J&K, whose request it has been for quite some time. The Fitment Committee has also recommended it now. All types of sprinklers, including fire water sprinklers, will attract 12% GST, and to regularize the past practice on an as-is whereas basis. Council recommended to prescribe 12% on all solar cookers, whether it has single or dual energy source. There is going to be a rolling out of biometric-based Aadhaar authentication in an all-India basis. You know that we ran a pilot in Gujarat, also a pilot in Puducherry. There have been very good inputs coming out of it. So this will help us to combat fraudulent input tax credit claims made through fake invoices. In the cases where the applicant had opted for Aadhaar authentication and where the case has been identified on the basis of data analytics and risk parameters on the system, these have been tried in the GST Suvidha Kendras, and this will be taken up on an all-India basis.
So we're coming in from the Finance Minister, key takeaways from the 53rd GST meeting that was held over the weekend. But Payavulla Keshav, the Finance Minister of Andhra Pradesh, shared his thoughts on the latest recommendations of the GST Council. Let's go across and listen into what he had to say.
A lot of issues were discussed the whole day, and most of it looked like they were trying to clarify what has happened, and it was trying to make a little more easier, little more user-friendly, business-friendly. They were trying to avoid all the future litigations. It looked, not only it looked, it is intended towards user-friendly and business-friendly approach they have taken today. Post-budget session, there is likely to be another meeting to go in further details of the GST.
All right, then that's the word coming in from Andhra Pradesh's finance minister. But let's move on then. And the GST Council's decision to not levy tax on company insurance premium as well as reinsurance commission retrospectively will be a consolation for general insurance companies. So to tell you what, let's delve a little deeper into this and which players are set to benefit. What does this really mean for the industry? Anurag is standing by with all of those details and more updates.
Major relief has been given by GST Council to general insurance companies and reinsurance companies, as these companies were facing several issues from last 5-6 years and were getting demand notices of thousands of crore. So most important one, GST on co-insurance premium has been clarified by GST Council, and as per GST Council, co-insurance premium will not attract GST. The another one is related to the GST on reinsurance commission. So GST Council has clarified that reinsurance commission between insurer and reinsurer will be considered as no supply, which means it will also not attract GST. The third one related to the salvage value deduction. So GST Council has said that they will issue clarification in next few days about the salvage value deduction, and insurance industry is hopeful that the past adjustment on salvage value deduction will not be taxable. Remember that last year in August 2023, ICICI Lombard got 273 crore demand notice on salvage value deductions in motor insurance claim. Other than that, 20 general insurance companies got demand notices of 15,000 crore from GST department on co-insurance premium. On this front only, insurance companies approached Bombay High Court also, because insurance companies were saying that GST on co-insurance premium will lead to double taxation. So now GST Council has clarified that co-insurance premium will not attract any GST. So these were the main issues general insurance industry was facing from last many years, and it all has been clarified in GST Council meeting.
Alright, Anurag, thanks so much for taking us through that. Now let's move on then. And Pine Labs, an Asian digital payments provider backed by Peak 15 partners and MasterCard, is considering raising about $1 billion in an IPO in India amid increasing investor appetite in the nation's stock market, according to sources. My colleague Anurag Joshi has more details on this. Let's go across and listen in.
Pine Labs is mulling to raise up to $1 billion through a initial public offering. Pine Labs is seeking to raise the money at a valuation of over $6 billion through the proposed IPO. The current investors in Pine Labs include Peak 15 and Temasek, and the last fundraise done by the company which operates payment gateways for banks was in 2022, when it had raised $50 million from Vitruvian partners. The IPO plan could include issue of new shares, and some investors of the company may seek an exit through the IPO.
All right, thanks Anurag for those details coming in. Let's move on then. And the US FDA has issued 6 observations to Cipla's Goa unit after an inspection this month. This follows a previous warning letter with similar issues as well, despite completing remediation. Further delays in site approval could impact product launch timelines as well. So how does this augur for the company, and how does this affect the business? Somit is standing by with an explanation.
Well, if you see, US FDA has issued 6 observations for Cipla's Goa unit. Now, this unit was inspected by US FDA between June 10 to June 21st, and earlier also when there was an inspection on this site, US FDA had issued a warning letter with around 6 odd observations. Now, Goa plant remains very critical for Cipla, and given the fact that Abraxane, which is one of the key products that is set to be approved from this side, and hence it is one of the most anticipated launch for Cipla, and until and unless there is a clearance for this Goa unit, this product cannot be launched. Now, analysts were expecting this product was supposed to be launched in FY26, and they're expecting a revenue of close to $45 million in FY26 and around $65 to $70 million for FY27, which is around 4 to 7% of its total US revenues. Now, this could get delayed given the fact that there has not yet been a clearance clearance given to this plan. Now going forward, if you see, company has around 15 days to give a response to US FDA, and post that US FDA might take around 90 days time to come out with their decision for this Goa plan. Now this Goa plan, if you see in the Q4 conference call, the company had indicated they had completed the remediation process and it was ready for US FDA audit. However, it has not got any clearance so far. Now FDA issues for the Goa plant continues, and the plant was first inspected in September 2019, and that time they had received around 12 observations. As US FDA was not fully satisfied with the Sipla's remediation process, they had issued an OAI status for this plant in January 2020, and then it was followed by a warning letter in February 2020. Now FDA had re-inspected this plant in August 2022, and that time they had issued around 6 odd observations, and some of them were repeat observations, and currently again when the audit was happened, the company has been issued around 6 observations. Now Goa plant clearance was also important given the fact that that would have paved way for its Indore plant clearance as well, because there was a contamination issue which was common between both these plants. Now do remember that Sipla's 2 major plants for the US market, that is Goa and Indore, are currently non-compliant with US FDA guidelines.
Alright, Swami, thanks so much for taking us through that. So all eyes are going to be on Cipla in today's trading session. But while you're with us, Swami, also talk to us about Telecom, because the telecom spectrum auctions are set to kick off tomorrow. Remember, Reliance Jio, Bharti Airtel and Vodafone Idea deposited a total of 4,500 crore as earnest money to bid for fresh telecom spectrum. So Swami, tell us how this is going to pan out in terms of action and also in terms of the stock impact.
Well, the telecom spectrum auction was earlier supposed to start on June 6th, but now will be starting on June 25th. Now earlier, Reliance Jio, Bharti Airtel and Vodafone Idea had deposited a total earnest money deposit of around 4,350 odd rupees, which means that they could bid for spectrum valued at close to 50,000 odd crore rupees. This is just an estimation number. The actual number will be revealed only post the completion of the auction. Now, given the fact that Reliance Jio has deposited the highest EMD of around 3,000 crore rupees, it was not pretty much expected by the street, because none of its spectrum is due for renewal and the company has adequate spectrum across all bands, across all circles. Now Jio was expected to largely be dormant in this auction, but that is not the case, and Jio will be aggressive even in this spectrum auction as per the AMD amount at least. Now Bharti Airtel is expected to bid for around 42 megahertz of spectrum, largely which is expiring in the 900 and the 1800 megahertz band. However, the AMD amount deposited by Bharti Airtel is still higher than what the street was expecting, and now they're also expecting the company could bid for additional spectrum when it comes to 800 and 900 megahertz band, and this could also lead to higher spectrum prices given the fact that Jio will also be aggressive in the spectrum auction. And lastly, when it comes to Vodafone Idea, they're expected to bid for around 1200 megahertz of spectrum, which are expiring in 2 circles specifically for them, and those will be in 900 and the 1800 megahertz band, and they're not expected to bid for any other spectrum, at least given the fact that they have deposited only 300 crore rupees when it comes to the AMD amount.
Well, absolutely. Thanks, Amit, for that update coming in. So that is exactly what is being penciled in when it comes to the telecom spectrum auctions. But with that, let's take a quick break. When we come back, we'll take a look at some more stock-specific news.
Hi there, welcome back. Still watching Market Cafe on ET Now. Thanks so much for staying tuned. Let's go across and get a little bit stock specific now. And Ujjivan Small Finance Bank will be in focus after it has reduced its FY25 guidance across several parameters, including loan book growth and return on equity, while credit costs are expected to rise for the year. However, it is confident of robust asset quality and improving asset mix. Now, what does this mean for the bank going ahead? My colleague Gaurav, who tracks this sector closely, is getting us all the details. Good morning, Gaurav. Take it away.
Well, yes, Ujjivan Small Finance Bank is definitely going to be in focus because now the bank has reduced some of their guidances. So, for example, gross loan book is expected to increase almost by 20% on a YY basis versus earlier guidance of 25%. Because of this, we may also see credit cost going up, which was to 1.7%, which was earlier guided as 1.4 to 1.5%. And now talking about the profitability, now ROE can also get impacted because of this. We may see ROE somewhere in the range of 20% versus the earlier guidance of 22%. Apart from that, bank has actually maintained maintained their NIM guidance at 9%, and they also believe that the deposits growth will be in line with the loan book growth. What they have also given is that for FY25 they have given some strategies. So what they're going to do is that they're going to improve their asset book balance with the secured portfolio. They are going to target it around 35% of the portfolio in FY25 and around 40% in FY26. Apart from that, they're also going to scale up some of the segments or like gold loan, vehicle finance, micro mortgages. They already have strong asset quality which they are expected to maintain. And lastly, they are also going to emerge as top 3 preferred lenders when we talk about vehicle finance. Now, why they have cut down the guidance is that they have seen some stress building up in the MFI segment specifically for the last few quarters and for the last few weeks specifically. In H1 FY25, they're expecting MFI to remain subdued, but in H2 we may see some kind of recovery in this segment. We also have management rejig in this bank. So Mr. Sanjeev Nutyal will be taking over as MD and CEO from 1st July. And on universal banking, management believes that this bank is actually one of the few banks who is eligible for universal banking license, and they will be looking forward and moving towards converging towards universal bank. We have already seen that the bank has achieved some of the key marks like 30,000 crores of gross loan book, 31,000 crores of deposits. They have maintained NIMs at 9.1%, but definitely watching out on how this will impact the share price given that they have now reduced some of the guidance for FY25.
Surely, Gaurav, so we'll be watching out for the impact on the share price as well. But while you're with us, tell us what the brokerages are saying as well. Which are the ones that you're looking at and what are the key takeaways then?
Well, yes. First, let's begin with TBO Tech because Goldman Sachs has initiated with buy rating and a target price of 1970 rupees, which leaves a healthy upside of more than 20% on this stock. What they believe is that consolidated demand supply in a large fragmented market is going to help this company from here on. Business model have multiple positive sides. So if you look at some of the positives, they have asset light balance sheet, they have negative working capital, and on back of this, they also have strong free cash flow. And lastly, they also believe that company's India business is indexed to grow at affluent India, and on back of this they are being bullish on this company. Next, let's talk about Havells because Jefferies has maintained hold rating with a target price of 1800 rupees per share. What they believe is that there are key drivers for Lloyd margins that could which are like normalizing ad spends, capacity utilization and cost saving. They believe that new capacity is going to commission in June 2025 which can actually aid the profitability, and on back of this they are expecting 21% growth in terms of EPS for FY24 to FY27 for the company. And lastly, let's talk about Apollo Hospitals because Kotak Securities has maintained its ad rating and target price of 6,735 rupees per share. What they believe is that company is guiding for 8% growth when we talk about patients volume, which is actually a good side. They are also aiming to create a retail healthcare powerhouse with Apollo Healthco. And lastly, the Keymed acquisition that the recently company made is going to be in a right direction. And on back of this, they believe that Apollo Hospital is one of the preferred hot stock pick when we talk about hospital space from Kotak Securities. So definitely watching out on all these companies also on the back of the strong note that is coming from brokerages.
Gaurav, thanks so much for joining us bright and early this morning and sharing with us what brokerages are flagging off. But now let's get a little technical and I'm going to take it across to my colleague Ansh, who's joining us with the FNO snapshot and what we can expect today. Ansh, well, new trading week in the last trading week of June. So what kind of levels are we watching out for? What can we expect?
Right, so let's start with what FIs did in previous session. In index future, we saw them covering the long by around 2,300 contract, which is a bit of bearish sign. But at the same time, they covered shorts by around 3,800 contracts. So net to net basis, we were positive, up by around 1,500 contracts, due to which the total FI long position has touched its 57%, which is a 48 session high, indicating FIs are getting very bullish in the market. But if we say index, then in Nifty, we are seeing that the index has been consolidating above its breakout level of 23,480 from last 4 sessions. So this is a market for intraday traders, as we are seeing that indices have been going in sideways range. Also, average daily turnover in cash market in NSE is at all-time high, which is very beneficial for intraday traders. But getting back to FNO, index future for Nifty, we are seeing open interest declining by around 5%, indicating long unwinding. So longs are getting covered, which is again a cautious sign. Whereas on option front, we are seeing call writing happening at a 23,600 mark, indicating strong resistance around this level. Whereas on downside, we are seeing put buying happening at 23,400, indicating option traders are expecting Nifty to go around this level. Currently, we are around 23,500, so they are expecting 100 per points fall here. Moving on to Nifty Bank, as you can see in the chart as well, the index has been hovering around that channel resistance from last 3 sessions, indicating cautious signal. Also in index future, we are seeing that open interest has gone down by around 8%, indicating long unwinding, same as Nifty as well. So here also longs getting covered, bit of cautious signal. Now, if we talk about today, then today we have BSE BankX and Nifty mid-cap expiry. So can expect good volume and volatility in this contracts today. Lastly, let's have a quick view on few FNO stocks that are in focus. And we are seeing significant long build-up in Bharti Airtel, Vodafone and Granules, where short build-up for BPCL, HPCL and Chamba Fertilizer. Also, Granules and Chamba Fertilizer have entered into ban list. So you cannot trade in this contract, but you can trade in cash market.
All right, Ansh, thank you so much for that roundup coming in when it comes to the futures and options. But let's also take a look at the stocks that you're watching out for in terms of how they'll be in focus in trade this today as well. So tell us about what makes it to your list then.
Right, so Cipla will be the first stock in focus for today's session, as US FDA had actually conducted an inspection at company's manufacturing facility in Goa between 10th and 21st June. And on conclusion of the inspection, the company has received inspectional observation in Form 483, which is a cautious signal, a bit of negativity to the stock. Apart from this, JSW Energy is also in focus, as company has received letter of award for ISTS connected wind solar hybrid power project of 300 megawatt from Solar Energy Corporation. Garden Reach is also in focus, as the company has signed contract for construction and delivery of 4 multi-purpose vessels of 7,500 DWT. Peninsula Biotech is also in focus, as they have incorporated its wholly owned subsidiary with an initial investment of around $75,000. Tata Steel is also in focus, as their workers will be going on a strike action from July 8th, and about 1,500 workers will be going on strike, is what the union has said. HG Infra is also in focus, as they have incorporated 6 wholly owned subsidiary, all carrying out for business in the field of solar power. Lastly, Welspun Specialty will be in focus, as company has been notified as L1 bidder by BAIL for supply of seamless stainless steel boiler tube. The total supply contract value for which is 117 crore. So keep an eye on the stocks.
All right, Ansh, thanks so much for taking us through that. Now, let's talk about a recent event that's been happening, and it is Telangana's loan waiver. The state of Telangana has announced a farm loan waiver, and they've approved this waiver of up to 2 lakh rupees for the farmers in the state. The cost of the loan waiver has been quoted to be around 31,000 crore rupees, and reports indicate that Jharkhand is also contemplating to raise this loan waiver amount from the current 40,000 that they have to up to 2 lakh rupees. Now, what is the impact when something like this happens? A lot of players are into play, or a lot of paths to this entire scheme that plays out, not only for one stakeholder, but there are multiple stakeholders when it comes to play when something like this happens. Now, this is sentimentally negative for the entire lending sector as well as agri. Now, waivers impact the basic financial discipline, and also this also discourages genuine borrowers to repay. So, sentimentally negative coming in for the entire lending space. Now, let's talk about how what the exposure is looking like. And total scheduled commercial banks have an agriculture exposure of 1.1 lakh crore rupees in Telangana and roughly 13,000 crores in Jharkhand. PSU banks also contribute up to 81% in Telangana and 60% in Jharkhand. So quite the exposure coming in for PSU banks over here. So the impact of this loan waiver could be seen on PSU banks today. Now, in terms of what the microfinance institutions have to do when it comes to an event like a loan waiver, first of all, let's talk about Maharashtra and what happens in Maharashtra, because there's a fear of probable agitation in the state of Maharashtra. Remember, Maharashtra is a state that heads into elections later this year. So something similar could also be seen over here. And once that happens, what will happen to the microfinance institutions? Then MFI exposure in Maharashtra is higher at around 8 to 10% of AUM as on March 2024 compared to the MFI exposure in Telangana, which is very minuscule at on an average 0.7% of the total total outstanding loan book, and MFI exposure in Jharkhand is low at 3% of the total outstanding loan book, which means that it is comparatively higher when it comes to Maharashtra at 8 to 10% of the total AUM as on March 2024. So lots to watch out for when this happens, because this could also create a ripple effect. One state announcing a loan waiver could also have an implication to other states, especially something like Maharashtra that is heading into elections this year, and we can also expect to see something similar coming in. So important to understand how this is going to impact the entire financial space and lenders like your PSU banks as well as your microfinance institutes.
Well, absolutely, and definitely it's going to be a space that we're going to be watching out for. But let's take a quick look at some other news and updates coming in from outside the world of stocks. And the National Testing Agency has recorded only 48% out of 1,563 candidates who have appeared for the re-examination of NEET UG. Remember, the re-examination was an optional test held for students who were awarded grace marks as well. Moving on, 4 people were arrested on Sunday for allegedly assaulting a Central Bureau of Investigation team who were investigating the UGC NET paper leak in Bihar's Nevada district. According to local police officials, villagers thought that the sleuths were imposters who were falsely claiming to be CBI officials. And the first session of the 18th Lok Sabha will start today with the oath-taking ceremony of newly elected members of the parliament, including PM Modi. The first session is expected to be stormy, as the opposition is likely to corner the BJP-led NDA on the election of the speaker. On June 26, discussions regarding allegations of paper leaks in NEET UG and UGC NET, and row over the appointment of the pro-term speaker. And days after deciding to retain the Raebareli Lok Sabha seat in Uttar Pradesh, Congress leader Rahul Gandhi has written a letter to the people of Wayanad. Rahul wrote that when he faced abuse day after day, the unconditional love protected him. Further, Gandhi also added that though he's sad, he's also consoled because of the fact that his sister Priyanka will be there to represent him as well.
Well, let's quickly keep it going then. Delhi Chief Minister Arvind Kejriwal has filed a petition in the Supreme Court challenging the Delhi High Court's stay on his bail, and according to the Aam Aadmi Party, Kejriwal's lawyers have requested a hearing to be scheduled today. Moving on, in other news, the death toll in the Tamil Nadu Hooch tragedy has risen to 56, and around 216 patients are admitted to hospitals after they consumed illicit liquor. Meanwhile, the MNM party chief and actor Kamal Hassan also met with the victims of the tragedy. On a weather update then, rain continues to lash parts of the National Capital and NCR regions, bringing relief from temporary heatwave conditions. And the IMD says that light rain will continue for 2 to 3 days, but heatwave may make a comeback next week. And in terms of some international news then, at least 15 police officers and a priest were killed by gunmen in what appears to be coordinated attacks on multiple places of worship in Russia's southernmost Dagestan province. Russia's investigative committee said it had opened criminal probes over acts of terror in Dagestan, a largely Muslim region in Russia neighboring Chechnya.
Alright, then with that, we're completely timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put the show together, thank you so much for tuning in. But you don't go anywhere, because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.